the biggest question I get from most new option traders or even veteran option traders, because when you're trading options, the direction of the stock is the most important key in how successful you're going to be. So the biggest question I always get is how do I figure out which way the stock's going to move? I can't get, my option trades don't work out because the stock doesn't move in the right direction. So the biggest thing I can always tell you is you have to understand which way the stock is trending or going, or where do you think it's going to go. And the best way to do that is to look at the stock charts. There's no other way. How do you know if you're going to buy or sell an option? How do you know what strike to concentrate on, which expiration date to choose, if you have no idea where the stock has been moving to and where it might be headed to in the future? You should not be trading options at all if you have no idea which way the stock has been going in the past and possibly in the future. The only way to do that is to look at the stock chart. So if you want to up your options trading game, you have to start studying the charts, okay? So what we're going to do in this video, as I've done so many other times, make these free videos, is that we're going to look at the stock charts. Very, very simple process. All you have to know is the stock trending higher, lower, or sideways. Then you can make a much better informed decision on which option trade to take. So what we're going to do in this video is we're going to look at the charts. I'm going to show you my setups. We're going to go through some individual stocks, some indexes, and just get a feel of what's happening with the stock. And then you can make a smarter decision on which option trade to take. All right, so let's just jump right in and look at the charts. Okay, everyone, Lee Lowell here from smartoptionseller.com. The reason why you come to YouTube is for answers, to solve a problem. You need help with something. So I make these videos to help you out, to help solve your problems of how to figure out how to become a more successful options trader. And to me, it's all about reading and looking at the stock charts. That's the only way that I know how to trade options. And I've been doing this for over 30 years, still doing it, still making money. And it's because we look at the stock charts. All right. So let's jump right in here and talk about what we're seeing. Now, we always want to look at the indexes first. Okay. The overall view of the market. And the best way to do that is to look at the S&P 500. That's what I concentrate on the most. The NASDAQ and the Dow. Okay, those are the three main indexes. But we look at the S&P 500 first, and we use the SPY, which is the exchange traded fund for the S&P 500. So what you see in front of you is the SPY, the daily chart of the SPY. This is the price action up here. Down here is the RSI indicator. So I want to show you what I look at. It's very simple. I have three moving averages. That are these lines right here. This blue line is a 20-day moving average. This red line is a 50-day moving average. And this green line is a 200-day moving average. Those are three moving averages. And down here is the RSI. It's a 14-day look back period. And the RSI is an oscillator that oscillates between overbought levels and oversold levels, which we don't really see an oversold level here, but the levels are 80 and 20. Okay, those are levels that tell you whether a stock or index is getting overbought or oversold, and then you can kind of time your trade, your option trade or your stock trade based on the RSI, which is based on the price action up here. So you'll see a lot of these blue lines here. These are patterns that you draw on charts to help you understand which way the stock may move next. Now, chart reading is a skill that it's good to learn. It's really important to learn because it can help you spot patterns. These patterns repeat themselves over and over again because we as individuals, we're the ones trading these markets, so we always make the same decisions. You have fear and greed working off of each other, and it tends to create these patterns in the markets that resolve themselves almost in the same way every time. So we like to draw on the charts. We have these channels, mostly the channels, which are just giving you an idea visually of which way a stock is trending. The trend is the most important thing. You want to ride a trend until it turns in the other direction. And the best way to see a trend is to look at the channels, and you draw the channels. You connect some of the tops, you connect some of the bottoms, and the price action bounces off of each, the upper level and the bottom level. Now we also have other patterns, which I'll show you as we come along and look at some of these other stocks that repeat themselves over and over again as well. And the best way to help yourself is by learning technical analysis. It's not that hard. In the description below, I've got some books and websites that can help you. Simple technical analysis books. You can also watch other videos, do some free research on the internet as well. But if you want some information, look down in the description below. So let's just talk about what the stock market's been doing. We'll look at some individual stocks soon as well. But the first and most important thing you can see is that the market has been going up. This is a 2-year look back period on the charts here. So basically, since this is October of 2022, right here, the market's been going up for over 2 years now. But this is the trend. This is what's called the trend. The trend of the overall market has been going higher. So if you're, think about this intuitively, the market's been going up. There's a good chance it's going to keep going up. So you would probably want to take more bullishly oriented positions. In the long run, and let's go back and look at a long-term chart. This is a monthly chart now. Going back to the early 1990s, you can see the stock market goes up in the long run over time. It's always been that way because the market is made up of real companies that create real products that people really buy with real money. And as long as these companies keep creating these products and people keep buying them, the earnings of those companies are going to keep going up, which means the stock prices are going to keep going up. And the indexes themselves are made up of these profitable companies. So the indexes which track these companies are biasly set up to go to the upside in the long run. So if you just want to passively invest in the market, you just invest in an S&P 500 fund and it will go up over time. But a lot of people like to trade shorter term trades like in the options market. So we need to look at a shorter term basis. So that's when you dial down to the daily chart here. And some people play 1-minute charts, 5-minute charts, whatever. Still, you have to understand which way the market is going, and the market is going upwards. So where are we right now? Here's the SPY S&P 500, all-time new highs just this past week. So the market is doing well. The market is going up. We're at the most bullish period of the year. The end of each year is very bullish. And you can see the market just kind of hugs along the 20-day moving average. Sometimes it pulls back to the 50-day moving average, which gives you an even better buying opportunity. Stocks that are in a strong uptrend will definitely hug along either the 20-day or the 50-day moving average. The 200-day doesn't really come into play too much when you have a strongly trending market. You'll have these big pullbacks, but these are quick and they get bought up very quickly. So if you're looking to be bullish, you want to see a stock that's first and foremost going upwards and bouncing off the moving averages, okay? That is how you make better timing plays in your option trades. If you want to be bullish and you want to buy call options, you have to watch the stock. Number one, it has to be going up. Wait for a pullback. This is your timing play right here. Wait for a pullback to one of the 50-day or 20-day moving averages. Okay, so you can wait for the pullback here and here and here. This one was perfect right here. That's how you get in. That's how you make better option trades, by number one, finding the trend and then waiting for the trend to pull back to a support area. Support and resistance, very important things here. Support is where a stock or an index has not been able to fall through, and then it typically bounces. Resistance is an area where a stock or index has not been able to bust through and it keeps falling back. So if you're bullish, as I said, you want to wait. First of all, it has to be in an uptrend, and then you wait for the pullback within the uptrend. That's your higher timing. That's your higher probability timing play when to get in, okay? So the SPY's moving up. Let's look at the NASDAQ. This is the exchange traded fund for the NASDAQ, the triple Qs, QQQ. Okay, if you want to know the symbol over here in the upper left-hand corner. All-time new highs as well. Here, this is Friday the 13th, December 13th, made all-time new highs. So it's just going up, hugging along the 20-day moving average, hugging along the 50-day moving average. Look at, if you don't if you don't look at charts, it's very simple. You could do free stuff. You can go to Yahoo Finance, use their charts. You can go to stockcharts.com, barchart.com. You can even use TradingView. TradingView is it's a cheaper, it's still a paid plan, but it's cheaper and it's more upgraded type of charting platform. I have all the links. Please read the description below about all these good websites and books and links for things that will help you with your trading game, okay? But the NASDAQ going up as well, all-time new highs here. Here's the Dow Jones. We're using the diamonds, DIA, this is symbol. Had pulled back this week, so the Dow had a little pullback, but it also had just made all-time new highs as well. So the indexes themselves are doing very well. Bullish time of the year, but as I said, look at the patterns, look at the trends, get in on the trends. So let's just start looking at some individual stocks and we can see, I can show you some other patterns. Now, this is how I do it. This is my setup. I got the stocks on the right-hand side here, and these are the stocks that I follow every single day looking for trades in our newsletter. Now, in our newsletter, what we do is we sell put options, we sell put option credit spreads. That's our gig. Why do we sell those two types of option trades? Because they're bullishly oriented option trades. Since the market spends more time going up than it does down, we want to get in trades that take advantage of bullish movement. And very conservative trades too. We're hitting singles, not swinging for the fences. We're slow and steady. And the best way to do that, in my opinion, is by selling out of the money put options and selling out of the money put option credit spreads. If you want some information about that, let's go to our website right here, the Smart Option Seller. We are all about put selling. Get our free ebook. Click on our free ebook right here. It is all about put selling, what it is, why we love it. Put selling basics right here. It's free. Scroll down, put your name and email address in here, and we'll send you an email back with a link to download the free ebook. If you want more information, want to go a little deeper in depth, we have our 5-part video series. About 5 hours long. You get a free trial to our newsletter in which we actually sell put options and we sell put option credit spreads. This is where you can learn about the newsletters. We have our put selling newsletter, our put credit spread newsletter. We also have coaching sessions. We have our probability calculator. Please look at some of these links, okay? These will help you get up to speed with what we're doing. So let's go back to the charts here. Let's look at individual stocks. We go through these just to see if we can find some patterns, okay? So right here, this is Microsoft. Number one, it's in an uptrend. Number two, here's what's called a congestion pattern, okay? These are hand drawn by me. Once you see these patterns starting to develop, you draw the lines. This is a congestion pattern. You can see the price action is getting tighter and tighter and tighter, which means eventually it's gonna blast out one side or the other once it gets near the apex. Typically, it'll move within the direction that it came from. So it was moving upwards, congesting, then it's probably going to keep moving upwards again after people, figure out which way they want to go. Here, this little triangle is what's called an ascending triangle. You have the price moving up, you have the flat top where it could not get through for a while, then it finally blasted through. And then it started to make the congestion pattern. So these are the things that you look for. Over time, once you start studying technical analysis, you will start to see these patterns play out over and over again. So Microsoft right now looks like it wants to keep going to more all-time new highs. It's congesting for a while. People didn't know which way to go. And now once it blasts out, then it starts to get the momentum behind it, and it should keep riding higher. Okay, so that's Microsoft. Intel, down in the dumps, have nothing to want to do with Intel. Nike, here's another play. So this was a ascending triangle. Now Nike's been in a downtrend, okay? So before you start to get bullish on Nike, you want to look back in the past. As I said, this is about 2 years look back period. Let me move myself over here. So right around early 2023, Nike started in this long downtrend. You should not be getting into bullish plays while a stock's in a downtrend. Why would you want to do that? You're just going to try to pick bottoms. The stock's going to keep going down and you're going to get frustrated. You're going to keep losing money. Don't be bullish in a bearish stock. You have to wait until the stock turns around and shows you, let it show you that it's ready to go up. Now here, we had gotten into a trade on Nike. It started to look like it was starting to finally move up from the long downtrend. Here was this ascending triangle pattern that I drew. It started moving up, couldn't get through this area here, and I thought maybe it would blast out higher. it fell down to the downside. So Nike was not a good play there. But, these patterns are not 100% foolproof. But the more that you see them, the more that you can have confidence in yourself and making the right decisions. Oracle, it's been in a nice uptrend, has fallen back a little, fell through the 20-day moving average, has fallen through the 50-day moving average. So I'd be a little tentative here if I wanted to be bullish on Oracle. Could be starting a new downtrend, may fall some more down to the 200-day moving average. Don't know yet. The RSI is not overbought, nor is it oversold. So it may consolidate for a little bit. So I want to give Oracle more time before jumping into any type of trade. AMD is right now looks like it just wants to kind of keep going down. I would not be getting bullish on AMD right here. People might want to try to pick some bottoms. If anything, you want to draw some support, prior support areas. Okay, so this could be a prior support area right here. You draw the line. Okay, so maybe you wait to see if AMD bounces off of this line. I would not be buying anything until and or less it bounces hard off of here and then goes up. This thing could fall right through. Don't know yet. This is the last area of support because this is the last low that was made. So you want to keep this area in mind in the low 120s. I would not be buying AMD here right now. Apple, strong chart. You can see Apple's been going up, had some congestion for a while. Here was that ascending triangle pattern again, and it finally moved higher. These are all-time new highs for Apple. Apple is a bullish stock. You can feel more confident about taking bullish trades in Apple. Maybe wait for, so it's getting a little overbought here on the RSI, so maybe wait until it drops back down to either the 20-day or 50-day moving average, right back to where the breakout point was. If you want to look to get bullish, you have to learn how to use these charts and look at these patterns. Amazon has broken out to, I think this is all-time new highs. Let's check the monthly. Yep, all-time new highs for Amazon. Looking good. Not completely overbought, but it's certainly gone up pretty good in the last couple weeks. I would maybe wait for a little bit of a pullback to the upsloping. Upsloping moving averages is very important. If they're all upsloping, that means the stock is in a very strong uptrend. I would possibly wait for some kind of pullback to at least the 20-day moving average before jumping in here. You get the pullback, the moving average moves up, so somewhere they'll connect, maybe around here, right around the 220 level. And if it bounces off of that once it hits the 20-day moving average and bounces, then you can get on board for that next leg higher. Okay, this is how you want to use these charts, and have some patience. Don't jump in just because you want to get in. Have some patience to wait for the charts to set up for you. Now, Netflix, super strong chart here, and I know this is all-time new highs for Netflix, right? Yep, all-time new highs. It's been really strong. It was in this channel moving higher nicely, and then it just really got above the channel. But you can see it's kind of been hugging along the 20-day moving average right here. So Netflix is a very strong stock. A little wary here. The RSI is starting to turn down while the stock's still kind of making new highs. That's called divergence. Could be a little bit of a bearish reaction here. So keep an eye on Netflix. It may pull back a little bit. Cisco was in this nice uptrend. You can see it was in the downtrending channel. This is when it turned, started to go in the uptrend. So make the channels, draw the channels so you know how the stock looks on the charts. Now, it's kind of falling below the lower edge of this uptrending channel, but it's sitting on support. You can't really see it, but here's the 20-day moving average right here as well. So it's sitting right on the 20-day moving average. If it doesn't bounce in the next couple days, it may fall back to the 50-day moving average. So keep an eye on Cisco there for potential bounce or a drop to the 50-day moving average. Procter & Gamble, this kind of sideways. Walmart, just a nice, strongly trending stock. Just look at Walmart. Great. Just hugging along the 20-day moving average. That means it's a very strongly trending stock. So maybe wait until it comes back down to the 20-day moving average before dipping your toes in for that next leg higher. You want to make sure it comes down to the 20-day moving average or any moving average that you're interested in and then bounces before getting in, okay? Because if you get in too early, it could keep dropping. maybe dip your toes in a little bit. Don't go all in. You want to wait to see the reaction once it comes back down to the moving averages. But Walmart strongly trending up. You can see all the moving averages are sloping upwards. These are the things that are going to help you when you decide when and what type of option trades to get into. Since we like bullish trades and we like to be conservative, we sell out of the money put options. That's how we do it. Have high probabilities of winning. And just watch some of my other videos about selling put options. Disney looks pretty good, but as you can see, the RSI is turned down. We may see some more selling in Disney. You got the 50-day moving average moving up, so this could be ripe for some more selling. I would not be buying Disney right here, right yet. Tesla, what can I say about Tesla? Look how this thing just powered. Since the election, the U.S. election, when Trump has won the election, Tesla's just gone ballistic. We know the relationship between Elon Musk and Donald Trump now. I can't really see Tesla having a major catastrophe sell off at any time in the future. It may pull back. Yes, this is definitely an overbought, over-enthusiastic move here. I wouldn't get in bullish here yet. Wait for some kind of pullback, any kind of pullback, before really getting in. You want to, get some of this froth out of the market. Tesla's going to stay strong, but at least wait for some kind of pullback before jumping in. That way you won't be buying on the highs, and you can wait for another. Let some people sell this thing, and then you can buy in the next go around, and then it can move higher again. Tesla, crazy stock. Eli Lilly, these healthcare stocks are getting beat up a little. Bristol Myers, Merck's down in the dumps here. Now you can see here's another. Merck is a down trending stock. I've highlighted this before. Here's a down descending triangle pattern. You can see it's going down. Here's an area where it couldn't pop through before, and then it finally dropped through. Don't get bullish on a stock like Merck. Why would you do that? It's telling you it wants to keep going lower. Don't try to buy here. Verizon, sideways. Costco, great company, had its earnings just this past week. Just keeps going up. So you wait. Hey, look at this. Look how it bounced. The low of the day. This one bar shows the high and low of the day. Look how the low just bounced right off the 20-day moving average. This isn't coincidence, people. This is how it works. Costco, great company. McDonald's, sideways. Pepsi. Pepsi's not looking so good here. Been sort of sideways for a long time, but it could be getting ready to finally, break down through this long. Let's draw a line here, and we can come back and look at it in a few weeks maybe. This long area of support for Pepsi. Let me get this straight here. There you go. If it breaks down through 155-ish or so, this thing could keep going. Where's the low here? Let's go to the monthly chart. All right, so look how great Pepsi's been. This can be the greatest buy right here, or it's going to keep dropping down. So we have to wait to see how it plays out. Let's go back to the daily. So the daily doesn't look so good, but on that monthly, it looked pretty good. This line in the sand, you want to wait to see it. Either it's going to bounce off of here or it's going to drop through. So keep an eye on Pepsi. These are the things you have to look out for. Warren Buffett, here's his Berkshire Hathaway fund. Up. Here is that congestion pattern as well. Bounced, blasted out to the upside. So use these patterns. Once again, in the description below, books, easy books, websites to help you start looking and learning about how these patterns work. Facebook, Meta, strong, it's going up, was in this channel for a while, finally got to the upside. And, maybe wait for a pullback to the 20-day, 50-day moving average right here in the high 500s before possibly getting in bullish again. Just use the charts. IBM, looking pretty good, trading near all-time highs. Google, doing well also. What else? Let me show you. Coca-Cola, great company, but just on the sell-off here. Here is that congestion pattern as well, but this one went to the downside. Actually, it's fallen pretty good. I talked about Coke in one of our newsletters recently for longer term trades. We talk about buying deep in the money calls as a long-term bullish trade. This could be an opportunity to buy here. Could get some support right in the low 60s. Keep an eye on Coca-Cola for the long run. What else? Johnson & Johnson's not looking so good. These healthcare stocks are not doing so great right now. GlaxoSmithKline. Look at all these things going down. You can see right here, the descending triangle right here. Price action moving down. Here was the support for a while, and then it just got taken out. So these healthcare stocks not doing so well. Adobe, just disappointing. Had earnings come out, dropped almost $100 a share. Stay away from Adobe for right now. It's not looking that good. NVIDIA, one of the darlings over the last couple years. Here was that congestion pattern, blasted out. Now it's sitting right on support at the 50-day moving average. It needs to hold here. It needs to hold and start to move back up again, or else it's going to start moving down towards the 200-day moving average. Keep an eye on NVIDIA. We have a position in NVIDIA. We sold some put option credit spreads. So we just need the stock to kind of go a little sideways or even go back up. But even still, we have a lot of wiggle room. When you sell out of the money put options and sell out of the money put option credit spreads, you're giving yourself a lot of cushion for directional error. That's what gives us a very high probability to win. What else? SMCI has fallen a long way. Let's look at last one here, Palantir. People love this stock. We actually got into a trade on Palantir as well the other day, sold some put options. It's working out. It's a strong stock. It's got the momentum behind it, hugging along the 20-day moving average, but it's probably getting near the top right now, the RSI's at that overbought area, but there's a tipping point. What's more important, the momentum or the overbought indicators? Nothing's guaranteed. If you have so many people that just want to get in this trade, it's going to keep it up. It's going to keep going up. So we play we try to get into some of these trades where we think that the momentum's going to keep going, which we're banking on, and then we get out of the trade before it collapses. If it ever collapses, don't know that yet. All right, so that's it. That's the key here. That's the video for today. Make sure you check the charts. Learn how to do technical analysis. That's what it's called. Again, down in the description, look at some of the stuff that I put in there. If this has been helpful to you, please give me a thumbs up, give me a like, leave me a comment. Let's make these videos go viral. I make these free videos, help solve the problem, help you become better traders. Send me an email. I'll put another video on the screen here, maybe 2 videos, one about selling put options, one about buying deep in the money calls. And before I go, let's just show you one thing here. Due to some encouragement from my family, we love puzzles. I created this word search book, in time for the holidays, stocking stuffers, whatever. If you like word search puzzles, I created this first book I've ever created, first puzzle book I've ever created, a sports word search. Go to Amazon. I'm going to put the link in the description below. If you need a last minute gift and you like puzzles, here's the book that I made. So I just wanted to bring that up. All right, that's all for me today. I hope everyone, continue to look at the charts, and I'll see everyone in the next one. This is Lee Lowell signing off.